Analysts weighed in on their 2024 outlook for the stock market. Do the economic numbers agree? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. So Philippine inflation numbers were announced last Tuesday, coming in at 4.1%, better than the 4.4 consensus and a marked improvement over the 4.9 print last October. So this is the lowest we've seen in the last 20 months and is just 10 basis points away from the BSP's target range of 2 to 4% inflation rate. So unemployment numbers also came in last week with a favorable 4.2% rate, which is the lowest in 18 years. So this should be good news for investors as more favorable economic numbers are starting to come out. However, what could have dampened the markets last Thursday was the dismal ranking of the Philippines educational system, as we only placed 76th out of 81 countries with the lowest reading comprehension scores. This means that a few years down the line, if this is not addressed immediately, we may not have a labor force skilled enough to handle the needs of an advanced growing economy. But nevertheless, in the immediate future, analysts weighed in on their outlook for 2024, predicting that market sentiment could shift into a risk-on attitude next year, especially in the first quarter, as global investors may look to potential growth areas in emerging markets. So the target upside for the PSEI is at 7,600 next year, which is a 20% upside from today's levels. And while 2023 could be considered a disappointment in terms of the overall stock market performance, this wasn't really uncommon, as most of the Southeast Asian regions also experienced the same trend. So with PH inflation more or less tamed, and going back to what was discussed last week, we are forecasted to grow by 5.3 to 6.5 next year, which is fourth overall globally. So it should hopefully attract more investors to the PH markets. Now, we also had some insights on some areas of opportunity in the stock market. Of note are the banks and property players, as well as the conglomerates. Some picks from Maybank includes SM, BDO, JFC, Bloom, GT Cap, and Globe Telecom. Another area that's also worth mentioning are REITs, as yields have gone to very, very attractive levels, which in Mr. Monson's words, you couldn't get anywhere. Meanwhile, let's look at the PSEI charts. The index had some initial optimism to start the week when inflation numbers were announced, rallying back to 6,300 before encountering resistance and lost steam by Thursday, pulling back sharply to 6,234. Now we are seeing the PSEI hover along this consolidation area here, marking the top areas here and the bottom area here. We could see the index work its way along this channel as we are still showing low volumes in the markets. Another factor that could have contributed to the pullback could be the long weekend, as we have consistently experienced this year. So far, let's zoom out. Looking back at 2023, here the initial optimism at the start of the year, the PSEI fizzled during the rest of the year, and we are still following this downtrend channel. But for next week, the ideal scenario is that we tap 6,200 here, hopefully to spring back up to 6,375 here, which is our strong resistance. Hopefully, we could rally along the back of favorable economic outlook. Now, if our ideal scenario doesn't play out, then a consolidation along this range may be likely. So watch out for announcements this week. CPI numbers will come out in the US on Tuesday, and Fed decision Thursday morning, and the BSP decision on Thursday in the afternoon, no, could either boost or pull the markets down. But we are not expecting any surprises from both central banks, so it will boil down to the inflation print this Tuesday. No? So meanwhile, let's look at some initial stock picks for 2024. Global economic weakness may still significantly weigh in our local economy, so we may still need to have some defensive components to our portfolio. AP, SCC, DMC, and MWC could be good picks for next year. Conglomerates are still looking good, AC and SM, and of course JFC and Bloomberry are still our favorites from 2023. But we are adding properties into the mix, easing out banks for now. No, Ali and SMPH, of course, at the top of the list. ICT shows a lot of promise in terms of fundamentals as well as its technical setup. Of course, REITs are still showing ultra high yields. I still think A REIT and C REITs are your best bet. But remember that high yields may not necessarily be an indicator of a good stock or a good company. Sometimes there are underlying factors why the yield has become too high. Now, this is called a value trap. What's the reason why the yields have become that high? It's because the stock price went down. And what's the reason why the stock price keeps going down? Is it bad earnings? Is it bad fundamentals? Is it a shrinking business, right? Because in this case, eventually, they may not be able to give the promised high dividends. No? So be careful of value trap. So on to the global markets. The U.S. received some encouraging employment data last week. JOLTS numbers coming in at 8.7 million, considerably off from the 9.3 million consensus. ADP also on the low side, 103 versus 130K. Non-farm payrolls ticking up 199 from the consensus of 180K, but understandably because of the re-addition of the union auto workers and the Hollywood writers who went on strike. Then boom, unemployment rate coming in at 3.7, down from 3.9% expectations. So this will be the story in the foreseeable future. We wait for economic data, the markets react, we go up, we go down, we go up, we go down. So it will be a continuous tug of war between the Fed and the bonds market. So on top of that, this week will be the third week options expirations on Friday, a whopping 4.6 million options. So far, look at this craziness. We are at 4,600 and we have bets at 500, we have bets at 480, we have bets at 420, we have bets at 434. Maximum pain is at 441. So why are we even thinking that from 460 the markets are going to go all the way down to 420 or all the way up to 500? So let's look at the S&P 500 charts. It was the sixth straight week of gains for the S&P 500. We did get a pullback early this week as the market confirmed that the labor market was softening until Friday's payroll data boosted the index as analysts again pricing in a soft landing scenario. So we are again moving along this range, 4,550 to 4,600. Now this breakout here could trigger a pullback that could break the lows back here and rally towards a breakout, maybe to 4,600. As usual, it's not uncommon for the S&P 500 to open in one direction, going down, and then do a 180 during payroll Fridays. If we plot out the options walls, look at how ridiculous that is. 500, 480, all the way down to 420, 434. Is this even likely? So some things to consider this week. Again, CPI numbers on Tuesday, Fed rate decision on Wednesday afternoon at around 2 p.m. So we could see the markets coil along this area here and react wildly on Tuesday and Wednesday. So do we tap 4,600 and followed by the Fed raining on the markets parade and fall back to 4,500 or 4,400, right? So why are we getting these wild readings? Are the markets reacting to some analyst forecasts? Because some 2024 year-end forecast came out last week predicting a bullish scenario to the S&P 500 by the end of 2024. Fundstrat even predicting that the S&P 500 will reach 5,200, and the bearish of them all, JP Morgan forecasting a pullback to 4,200. So far, the markets are already starting to price in up to 5 rate cuts next year. So I think Chairman Jay Powell will need to come out with some heavy rhetoric this Wednesday to tame the markets a bit, because he's been firm on his higher for longer stance, as well as his, we will wait for more economic data statements. So, but analysts have so far gotten their predictions wrong in the past years. Remember, last year the headlines were all about 2023 going into a recession. So, while they play tug of war with dumb money investors, will just have to sit back, relax, and enjoy the show and react when the time is right. So let's check out this week's calendar. Inflation rate coming out on Tuesday, followed by Fed speak on Wednesday. We will have to wait and see how the numbers play out and how the markets will react to the news for now. But so far, that's it for this week. Please like this video if you found this information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.